Good morning. This is Dylan Jovine behind the markets. Happy Friday. Today is Friday, March 27th, TGIF. And if you haven't noticed, we launched a new website. I urge you to log in, check it out, help us make it better. But I am very, very optimistic about it. I actually think this is quite a leap for us. Very, very good stuff. Very, very happy with it. So anyway, today I'd like to talk about gold. Gold 10,000. That is what famous analyst Ed Yardeni is still sticking with. Also, UBS out with a note, and a bunch of analysts out with notes, really reaffirming their bullish stance on gold. But I think UBS did a pretty good job of it, and I figured I'd discuss their note and then add my own little color commentary to that. The investment bank's Global Wealth Management Office doubled down on its bullish stance on gold this week. And basically, analyst Wayne Gordon and his team said that, look, despite the recent declines, they think investors should stick with gold as a defensive hedge. And look, remember something. Since this war broke out, one of the big buyers of gold basically have been foreign countries. They're using their excess, their reserves to buy gold because most of it's held in dollars. So they've been hedging against dollars, okay? Now, when this war breaks out, all of a sudden, these countries hold on to their reserves. They hold on to their money. It's kind of a flight to, stable stuff. They're not using excess reserves to actually buy gold. Think about oil producing countries. Let's say that you are Saudi Arabia and you're selling $1 billion worth of oil a day. You take that money and part of it goes into US dollar instruments, part of it goes into Saudi Arabia instruments, and part of it goes to buy gold, to hedge. So a lot of those countries that would be buying gold right now are locked in this whole, let's hold on to our money just in case we got to spend it internally, just in case we got to boost our military budget, just in case whatever, just in case anything happens. So they're really getting defensive. And gold has really dropped heavily on that. But remember, there are two things that are making up the gold argument. The first is the fundamentals, which I'll talk about. And the second thing is the speculators. But the fundamental case for gold is still, sadly, very strong. If you look at American history, if you take a chart and you go back, during periods with high inflation or debasement of currency, gold goes higher. During periods where we're not debasing our currency and low inflation, gold goes lower. So if you think that we are going to keep printing money, fundamentally, if you think that debasement of currency makes 30-year bonds and 20-year US bonds unattractive at fixed income rates, if you believe that, which I firmly do, then gold is part of your protection, part of your portfolio. As Ray Dalio says, 10 to 20%. You just hold it, you ignore it. If it goes up, it goes down, and you just put it away. You don't even think about it because you fundamentally think that over the next 10 years, the U.S. will keep spending money, that there are deficits and red ink as far as the eye can see. If you believe that, then you are long-term. You keep gold in your portfolio long-term. Also, if you believe that other countries, big central banks, which have been driving up the price of gold, buying, massive buyers, if you believe that they also are smart enough to realize that I'm not letting the U.S. government pay me 5%, I'm not going to buy 5% 30-year bonds from the U.S. Treasury anymore because these guys don't keep their fiscal house in order. If you believe that they're smart enough to do that, you stay with gold. So the fundamental long-term case is bullish. But also, there's the top of the beer, that speculative case that's just jumping all around. And that's, we'll call it 20% of the price has been crazed up by speculation. Now that is going to go up, down, up, down, up, down. So you have this big fundamental case. You have this fundamental range, but around that range trades the noise of speculation. And this is how you have to look at this. Again, you have this long-term fundamental value range based on debasement of US currency, but around that range is going to pop up around the signal, this little noise signal that are speculators. You got to just, in my experience, ignore those, ignore the short-term speculation, turn out the noise, and try to focus on the core signal that gold is telling you. And it's really not about gold. Gold is a byproduct. The rise of gold is a byproduct of something else happening. The something else that is happening is U.S. currency debasement. Okay, I would not argue. I have never in my life recommended gold. Maybe once when I was a kid and I didn't know any better, but I'm not really one of those gold bugs. But when we started to debase our currency, I started to look at this and look at history, and history started to tell me that is why I went long gold in 2022. And of course, it did great for us in our mono portfolio. Anyway, that is all I have today. Have a wonderful weekend. I will speak to you on Monday. Try that new website. Let our customer service know what we can do to make it better. We want to make it good for you. That's the whole point. We are here to help you. Anyway, that's all I have. Have a great day. See you Monday.